Good morning, traders, investors. Here we are in March. Good January, up nearly 6% in the S&P, down 3% in February. And now we're stuck. What's going to get us out of this trading range? Some really bad retail earnings didn't hurt the market. China, up again. Try and figure out the reason for that one. Craig Johnson coming on at 8:35. He's going to help us figure out this market for 2023. This is pre-market prep. Mitch, let's get it going.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, let's get things started here. Week close, follow through in the aftermarket, and poof, we are up 8 handles at 39.83.5. A weak buck is helping it out, down 70 cents. Just couldn't hold that last rally. 104.12 is our last print. Bonds just down a few ticks, just over 125. Crude just stuck in the mid 70 handle, down 60 cents at 76.44. Gold couldn't have a couple up days here, up 1040 at 1847.10. Silver back over 21, up 15 cents at 21.22. And Bitcoin, it's back up again here, up $480 at 23,890. So Triple D, when you shut things down at 8 o'clock last night, it was a much different market.
Yeah, China turned this market around. So yeah, we were significantly down here overnight. We had an ugly close and an even uglier after hours. S&P's tanking into the close end of the month. Obviously action there. We lost about 10 handles in the last 10 seconds. Really hit hard.
Really quick.
Then we lost another 15 after hours. So it was setting up to be an ugly day. But we got some good economic data from China coming from Reuters here. I can just read the headline there. China stocks bouncing as China's manufacturing activity expanded at the fastest pace in over a decade. So that is why we got some good PMI data from China. That is why you're seeing the big rally in China stocks, which has turned the entire market around. I mean, Alibaba was in the gutter. Boom, it's up $5 here this morning. Baidu, you pick your Chinese poison. Up $8, Baidu. FXI is up 4.72%. KWeb up even more, 5.96%. China is your catalyst here this morning.
And you go from doing nothing to closed economy, and then you open things up a little bit. Wow, what a surprise in those numbers, huh? I mean,
definitely reopening here, driving the bus, Joel. So great call there. I mean, obviously, China has been fighting COVID for, we reopened a long time ago, a year before they really have started. So now that they got the reopening going, you're starting to see it in the data, and the market is applauding that. It's, again, the market that prices in nothing. So it's the most simplistic market ever. I know everybody, the market looks out 9 months. The market doesn't look out 9 days. It can't price
9 seconds.
It's made up of dumb participants. So here, if you were thinking, and obviously I wasn't, but if you were thinking about it, well, there's a good chance that some economic data coming from China is going to start to improve as they actually reopen. So here, obvious trade, Captain Obvious trade. PMI data's up, and China stocks are ripping on it because, again, this market price is in nothing.
Mitch, what's on your radar? Do you want to go good earnings? Do you want to go bad earnings? Do you want to go about a vaccine maker that doesn't make vaccines going out of business?
Right? There's so much out there today, but let's get to it. Let's start with that NVAX, right? I mean, this is a company that in the pandemic, a lot of people were, banging the door that they wanted to get in it. It rose up. Big move. And then now look where it's at, team. This is just how quickly stories can change. And Novavax shares trading lower after the company reported, of course, worse than expected Q4 results and said substantial doubt exists regarding its ability to continue as a going concern.
Never want to hear that.
They reported a loss. They reported a loss of $2.28, missing the loss of 92 cents. Sales of $357.4 million, missed the $383.14 million estimate. Do you guys see Novavax getting out of here?
Yeah, I think so. I've said this too. This is just, the opposite case with Moderna. They got it out there fast. Both these companies were on it. This took 2 years to get their approval, 2 years to get their vaccine out there. And by the time they got it out there, the pandemic was over. So, I mean, they couldn't have did things, management couldn't have did things more wrong here. $6.66. You're going to see little pops, little squeezes because of high short interest. But at the end of the day here, I believe this company is going bankrupt. So I'm not betting along in this at all. I don't know the path that gets it there. Again, stocks don't always go to zero when they go bankrupt, but they often go to pennies. So I think there's $6.66 of still maybe pain here ahead. So no, I'm not buying the dip here in NVAX today. I could be wrong. I don't have a crystal ball, but I will tell you they dropped the ball completely on this compared to Moderna, compared to Pfizer, compared to BioNTech. NVAX, worst of breed, and looks like it is in a world of trouble.
Yeah, I'm not even going to comment on the short-term activity. I just remember writing about the stock during the pandemic, and I looked at like the previous patterns where 03, they must have had something really good. No. 06, we got something great. No. 09, oh, we got something fantastic. No. And then I don't know what happened in 15. I mean, so many times this stock just did the exact same thing, and then they just are doing it again. So no comments on the short-term trading action. I just sometimes when stocks, you could look at a history, you don't know a stock, you go look at the monthly, it gives you a little bit of a pattern. But down 257, 669 is your last print. But
the pattern is simply lower. This got up, just pure stupidity when this got up over $300 a share.
Man.
I can't believe they took that long to get that vaccine out there. I mean, it could have been a completely different story. They would have been in a different cash flow situation if they would have got the vaccine out there a year sooner. But too little, too late for NVAX.
And this is why I think it's important to always know the leadership, right? The kind of their history. Joel mentioning it. You can just easily look at it on the monthly chart, or you could actually look into their history. It wasn't a great one. Let's look at the SPY right now, or the ES. It looks like we had a little bit of a leak here at 8 a.m. But of course, to me, that just means more range bound, right? I think we've been stuck in this range. We've been talking about it. Would we be range bound? And it's been the chop, right? I mean, Dennis has been talking about it. I've been talking about it. The chop is ridiculous. Every time you think you are going to get a breakdown, a little bounce back to resistance. Yep. You get a move back to resistance. Yesterday, we get up there towards kind of those 398s, 399. Oh, let's just close off and sell off towards the close, right? Yep. I mean, that's this type of market right now. So you got to be careful out there with the chop.
It's not the market to chase in. It's the market that chops around. And I think we're still just going to be in a sideways market for the foreseeable future.
Sideways to down.
I think that's right, Joel.
Yeah,
I'd agree with that.
Joel.
Sideways to down. Yeah, I would agree with that. It's not going to be simple. I do think we've got a lot of pain ahead. Again, and maybe we should go into the Kohl's numbers here, which I still have some shares, and I cannot believe I didn't sell that on that recent rally up to 35.
Retail.
But retail has just been a disaster. These Kohl's numbers are a disaster as well. But the stock is off the lows here, so I mean, maybe they're not expecting much here. Maybe a lot of bad news is priced into this, but obviously not all of it because the stock's still down 7%. Give us those numbers, Money Mitch.
Let's go to Kohl's here. Kohl's EPS at a loss of $2.49, misses the estimate of 98-cent estimate. Sales of 6.02 million, missed to 5.98 billion estimate. They do see fiscal year 23 net sales down 2 to 4%, and see fiscal year 23 EPS at $2.10 on the low end, $2.70 on the high end, versus a $2.99 estimate. So lowering the guidance there for fiscal year 23, and a huge miss on EPS.
Yeah. I don't know if there's some one-time items in there, but that's
Yeah,
a
that's what it
crazy
is.
miss. Joe, we did get down into the 24 handle here. We have come significantly off those lows. We're back in the 26 handle. I'm still got the half size long position on this thing from way back in the day. I actually looked at this when it was rallying in January, got up to 32, and I thought about selling it. I never even realized it went to 35. I guess I got to look at the long-term portfolio more often. 35.77. What a gift that was up there. Should have dumped it all. I'm still holding that small size position in it, and it's been a disaster.
Couple
don't like the stock. Talking is my book.
Just couple comments on this. I mean, they got to quit giving stuff away. They have the Best Buy syndrome. I go in there, Lisa gives me like a coupon or something or whatever. I have a Kohl's Cash. Is that what they call it or whatever? And I'm like, whatever I was told to go in there and buy, I buy. And they're like, well, here's another coupon. And then they knock another like $5-10 off. And I'm like, oh yeah.
Yeah.
Okay.
You're exactly right. I remember shopping at Kohl's, always the same thing. You go and you buy, and then you get to the register, and they knock another 20% off what you were expecting to pay.
Here's the trick,
the ultimate couponers there.
Here's the ultimate hack. You order like a 99-cent item on Amazon, you let it come to your house, and you return it at Kohl's and get $5 off anything. Because they give you a coupon when you return
they are the
Amazon
ultimate discounter.
Products at Kohl's. They give you that Kohl's Cash, $5. Go spend it in the store.
Did they fire the CEO that turned down that deal? It's that supposed deal. It's 65 that they turned down.
I think they were trying to get that deal pushed through, but they never got it. I mean, that's what suckered me into the thing back at 40. 65. I was like, the P's not bad. We got a proposal potentially at 60, and it did go up after I bought it. Should have sold it. Didn't sell. Got to sell.
It kept on hitting 62. Boom, 62. Well, I thought the deal was at 65. Just last thing here. If you were waiting for the low of the move on this one, you just missed it. 23.38 was a daily low, and then 23.90. People stacking up at the whole number, right? You went to 23.90, 24. The way this looks right now, I know you had that little spike down to 24.50. Not sure what that was about, but I don't know. I think if you want to purchase this on the cheap near $24, you might have missed your opportunity there. We'll just call resistance at the close and the low at 28. Don't know when you're going to see that number again. And then Dollar Tree in the tank too this morning, huh?
Yeah, Dollar Tree's not doing good here. Their numbers were fine though, Mitch.
Yeah, it wasn't that bad. EPS at $2.04 beat the $2.02 estimate. Sales at $7.72 billion beat the $7.6 billion estimate. Dollar Tree sees Q1 net sales at $7.2 billion to $7.4 billion on the high end versus a $7.2 billion estimate. So not bad. High end pushes it above on the guidance for Q1. We'll see. I mean, I think you're going to start seeing more and more Dollar Tree kind of pick up. I know that I've been seeing like the Aldi's by my house getting more, and also we got a Dollar Tree that thing's always packed. So who knows? Maybe the consumer's starting to look for cheaper goods.
Well, they always do. In a recession, we've said this before, a stock like Dollar Tree or Dollar General can actually hold up not bad sometimes. And nothing's recession proof. Obviously, everything gets hit if everybody has less money. But some things hold up better than other things. I was actually short this into the report. Just did it last night. Somebody was bidding it up, Joel, $2-3. Yeah. They were bidding it up $2-3 ahead of the report, and I was like, you know what? I'll take a small size position in here. They're giving me a 2.5 point lead. Yeah, they were giving me a 2.5 point lead. I mean, sometimes even if they beat, who knows, a crappy environment, they're hitting stocks anyways. And it worked out. So I actually just covered it here.
Not bad.
I got 140 on some, and then I got 140. 2 and change on the other part of it.
Can I pick the price? Can I pick the price?
Where I shorted it?
Yeah, I'm gonna say
right. It was a little early. It went more after I did it.
Okay. 148.
Yeah, I was like 147.70 or something. Okay. I think 147.80 maybe.
Yeah.
So it was up about $2.50, and I'm like, you know what? Sometimes you just got to take the leads. Somebody maybe is really excited. Maybe somebody doesn't want to hold it through the report. And sometimes they just give you these opportunities. And it's not always the case. And sometimes they just literally they're up after hours and they blow it away. But we're just kind of in the environment here where I don't feel like there's, a lot of rip and roaring. And there's been a few. I mean, NVIDIA was one of them, but I just feel like retail is not loved right now. So I kind of was a little more confident going into that one. So I took a shot. It worked out.
No more than 700 shares was your position. I'm not asking you position.
I'm not telling you the size.
But I see on that.
It wasn't large.
Only 700
large.
Only 700 shares traded. So.
Oh no, it traded more stock than that up there, I would think.
Well, I'm just talking in the night. Whatever. Enough time on
it was trading up there all night. So I think it traded a few shares up there.
Trade.
But I mean, you've got to be careful when you're taking stuff into a report intentionally. You never want to be all in, because it's a wild card.
Completely.
Earnings are always a wild card. It's kind of a little bit of fun, a little bit of a gamble, but I feel like there's an edge there. When somebody's bidding something up and, you're looking at it.
They gave you some points on the spread. It's like gambling. Like they gave you the points on the spread.
That's what it is.
Like, I'll take it.
Yeah.
I'll take the spread.
Yeah.
You're giving me some advantage right now. I'll take the edge. Let's go.
You've gotten run over on stuff like that too. Real quick, the technicals, a logical bounce point here at 140. It went well beyond that into the 138 handle. It went to 138.28. Just sitting here at 140. So if you're looking for a rally here, I think the bulls have to come in and really defend this 140 right away. If not, you're talking about the lows from December, and I'm just going to give you a range. I'm going to give it from like 137.5 or 137.34. The 137 handle, I think, would be really juicy if you can't hold that 140. Those are the lows from the end of December before the big rally in January. What else we have? We have Dollar General. How's that trading?
I don't think it reported. Usually they report on the same day, but DG did not. I don't believe.
No, it did not.
When is DG due to report, Mitch? Because usually they do report on the same day, and it did not.
I have to report at the 16th. So that's 2 weeks from now.
Yeah, interesting. Because usually they're right around the same time. So DG, keep that in mind for DG.
Look at maybe they should call themselves the $5 store. Look
at the $5 store. Yeah, I mean,
look at Five Below,
man.
Look at Five Below.
Not doing too bad. I'll tell you one that did have a decent report, but it doesn't seem like we get the same love. Is Ross Stores. Let's take a look at Ross Stores. Their Q4 EPS at $1.31 beat the $1.24 estimate. Sales at $5.21 billion beat the $5.17 billion estimate. They see Q1 EPS at 99 cents to $1.05 versus a $1.18 estimate. So if we wonder why they got hit, could be because of that guidance looking forward, right? It seems like a lot of these retailers are telling us that at least the forward guidance doesn't look that great.
We're leaking here. S&Ps too, just before we're slowly. It seems like, again, we're just in this
kind of pop, man. We're too close to the top of the range. We got to come back to the bottom of the range.
China's trying to help this market, but this market just feels heavy. It's like it gets the pop, and it just feels like it's heavy there. Ross Stores breaking down from the 110. There was major support. There's all kinds of gap. I guess you got, those two lows, Joel.
That's it.
Well, you give them. I won't steal your content.
No, that's okay. I don't mind it. I don't mind.
I keep stealing Joel. He taught me too well. I keep saying that. He taught me too well,
man.
No,
this guy says he's not a technical analyst.
Yeah,
I'm the Joel Alconin. I don't know anything about, I don't have any degree in technical analysis. I just graduated from the Joel Alconin Technical School.
106.60, and the other low was 106.96. So if it where do you go if it takes that out? So the bottom of the gap is or the top of the gap is 97.95, and then coming back on the upside. I don't know if you're going to see the 110 handle. 110.40 and 110.69 were the lows from the last two sessions for Ross Stores, ROST.
All right, let's keep going. We're out of this kind of retail. We can touch one more at least that's in retail. Let's go to Lowe's, of course. Lowe's company here, Q4 adjusted EPS at $2.28, beat the $2.21 estimate. Sales of $22.45 billion. Missed a $22.69 billion estimate. Fiscal year 23 outlook revenue to $88 billion to $90 billion on the high end versus a $90.66 billion estimate. Another retailer telling us that the guidance a little lower than the estimate. EPS at $13.60 to $14 on the high end versus a $13 $600.84 estimate. Comparable sales are flat 2% year over year.
Home Depot obviously lowered the bar for them, which was helpful because Home Depot really got hit hard on their earnings, and these earnings were fine. They weren't great. Revenue miss weren't great, but they were fine. So, I mean, Lowe's gets a little bit of pop up here. You're 210ish. The one problem I've got here, I just think it's going to get tougher. I think that the good times a lot of these companies were experiencing, it's going to get tougher here. Easy money is not there. You're buying big ticket things at Lowe's and Home Depot. I've got to think eventually that interest rates hit Lowe's and Home Depot the hardest. People are going to hold off on buying the new appliance. People are going to hold off on, if you start getting tight for money, you're not going to buy the big ticket stuff. So I think it gets tougher for Lowe's and Home Depot. I absolutely don't want to own these. Lowe's is right near, the high for, well, I guess not the high for the year, but it's not too far off.
No, it's not. No,
yeah,
it's not.
so I think there's a good opportunity to get the hell out of this.
Yeah, I was thinking the same thing just because of the Home Depot reaction. You just barely snuck over 208. I probably would have been holding out for a gap fill here at 208.90. Full disclosure, I've owned this thing, I don't know, for 5, 6, 7, 8 years.
So you're Warren Buffett on this.
I can't sell it because, and I did sell some stuff, and man, oh man, looking for the cost basis on this stuff. Holy Toledo. Anyways, 208.90. But you stalled at 208, so that's what I would look at. But the gap fill at 208.90, coming back on the downside. You're already, first things first. Let's take out yesterday's high at 208.28. First things first. I'll call minor support at the close 05.75. Better support at the double bottom from the last two sessions. Let's call it 203.40.
I'm not very excited for this.
Nah, either am I.
All right, let's go to one that I'm wondering if, and I think Dennis sold the complete pieces. The Rivian Automotive. Let's take a look.
Yes.
Joel gave me permission to sell it.
EPS loss of $1.73 beat the loss of $1.94 estimate. Sales of 663 million missed the 742.39 million estimate. Rivian says during 23, gross margins are expected to remain negative, but expecting improving on a dollar basis for year as production volume in factory rises. They see vehicles produced in 2023, 50,000 units.
Huh. Quick story. Market to Jim. He left Ford to go to Rivian. And I was like, I'm like, when are they going to start making, some more cars? He's like, when I start getting them more supplies to make the cars. And I'm like, well, man, I go, that stock, man, it just didn't react like a lot of the other stocks in January. I'd be a little bit worried, I'm like, It's got to clear 22. I mean, it's down. I mean, opportunity to buy this under 1740. What's the low of the move? I guess the low of the move
15.
is 15.
Valuation's insane.
I don't have anything here for you folks. 1691. We didn't get that low, so that's the next daily low to contend with. That's actually your 3-day low. So 16, if you're inclined to buy this, 1691 or 17 to round it off. On the upside, if it catches a rally, bottom of yesterday's range, 1853. You never know what can happen. S&P's continuing to leak here.
There we are.
I was wondering why they were up so much this morning.
Well,
and
China.
Now I know.
It's all China.
China. Man, I should have got up at 4 a.m. I looked at it at like 2 a.m.
How high did we get on the S&P?
We were 13 handles higher.
Yeah, so we're down 10 from the highs, basically.
Yeah. Yep.
I mean, Rivian, it's tough. It was a good trade in January. We had it for the catch-up trade. It took forever. It was like everything
just
was
wouldn't
running.
go.
Like, why is Rivian not going? And finally it went, and it ended up working out. And then I, sold a lot of it, and I let Joel sell the back half of it. I think I got the back half. I can't even remember. I think
it was in the 20s.
In the 20s, yeah, in the 20s.
It was the same day that you made your 4200 call. And we talked.
I said that. I wish I would have listened to myself.
You did.
I said if we get anywhere, I sold some stuff, but I said if we ever got near S&P 4200, I was going to sell every single thing and go to cash.
You never sell everything.
I didn't sell everything. I sold some stuff. I should have sold everything. So, what I did that day was I've got a rental property. I can give you the backstory here. I got a rental property, had a variable mortgage on it, and it was ticking me right off. that I was paying. My variable had went from 1.42% to 5.6%. Literally went up over 4% a year. And I'm like, I cannot justify owning stocks and having that variable mortgage here. So I sold a bunch of stocks that were outside my long-term account. I have stocks that are inside my RSP, which is money I can only invest with, obviously in the markets. And then I have outside money too. So this is money outside the RSP. So I was talking to you, I was like, why am I paying 5.6% to hold these damn stocks? So what I did was I turned around and I sold a bunch of SPY, a bunch of Qs that I had forever. I mean, I've had some of these Qs in my portfolio for the better part of 15 years. So I had some huge gains I realized on, but I didn't want to pay the 5.62%. So I sold a bunch, paid off the entire variable mortgage on that, and then I slept better because you know what? You start seeing the stock market go down, and you're paying 5.6%. You're like, that makes you sick to your stomach. So we had that ridiculous rally in January. I did take advantage of that. But, I had talked about, my long-term RSP account where I've got a lot of, my long-term money in there going 100% cash in there too. I joked about that on the show multiple times. I wish I would have did that. Hindsight Capital's 2020.
Hard to do.
But again, it's we're just in an environment. I talked to the banker when I did that, and he's like, I'm seeing that everywhere. Because in Canada and Ontario, I don't know if it's different in the States, but if you have variable mortgage, you can pay the whole thing off and take a 3-month interest penalty. So you just pay 3 months of penalty and get out of the whole damn thing. And that's why I'd done a variable in the first place on it, because I wanted the flexibility. If you're in a fixed, you can't get out of it. So, but I did a variable just to have that flexibility. Interest rates went up substantially, and I'm like, screw it, I'm not going to do it anymore. So, I paid it off. But the banker was saying a lot of people are doing that. They're selling their stocks, they're selling their investments and paying off a good chunk of their mortgage or their whole mortgage if they can do it. I mean, that's got to put pressure on it too. People don't want to pay 5, 6, 7% if they don't have to. So, I mean, long-term returns in the markets is 7 or 8%. So you're going to pay 6% on your mortgage, 6, 7% on your mortgage, and to invest, with the possibilities of long-term returns of 7 or 8%. I don't like that risk reward. So at 1%, 2%, 3% interest rates, stock market makes a hell of a lot of sense. When it starts getting 6, 7, 8%, Tina trade and everything else starts to make less sense. And that's why I keep saying this rally, that we've had, I feel like eventually peters out, and it is in February. We may go back up there again, but I just don't see the environment to go to all-time highs.
All right, let's go to one more of the EVs. Let's just hit NIO here, as Q4 adjusted EPS was at a loss of 44 cents, down from a loss of 16 cents a year. Well, it's actually increased, not down. I'm sorry. That's I'll have to make that correction there. Sales at 2.33 billion, up from 1.55 billion year over year. I don't know. I've been trying to stay away from China EV just because of the China situation, but I did see good numbers from LI. You can see LI up right now. NIO's numbers weren't that bad. At least it did come down on that EPS, but sales are looking a little bit better. I just don't want to touch any of these until we actually get into an EV run where we're seeing everybody change to EVs. I think this is a runaway, at least for right now.
You don't want to be early on any of these trades.
Yeah, it's just too early.
And the buzz is, significantly cooled off. I still like the lithium plays longer term because some of the valuations there aren't crazy. So, and the LIC I know doesn't make money, but ALB's PEs, I think, and I own that one, is I think 15. And I mean, they're out of favor right now. The market's out of favor, and it's come off here too. But some of these lithium plays, I think you're going to be happy if you've got a 10-year time horizon on it. I still like the LTHM too. I know you got that, Joel, and obviously you should have sold it when me and Mitch said, "Oh, maybe you want to hold on to that." That's okay. Not the case. I mean, and it does look like it's consolidating to potentially go lower here. You got the big move up, you caught some people, and now
I'm going to buy more
here. Yeah, it doesn't look great. and I sold my lithium too. So here I sold it, and I tell you not to. I sold it way earlier though. It looked better when you were holding it. I got out too early. So I think, if we got back down to the 18 to 20 level on LTHM, I think I'll reload it. So I do like the lithium. I like the lithium plays better than the pure EV plays because a lot
Boy,
of
we
these EV
just went
companies are
red
going to go
there.
under.
Dennis, watch your bids here. We just take red here. Just been a steady selling.
Steady
I don't
lead.
think we have anything at 829 or
Don't we
830.
always have an 830 number?
I
It
don't
seems
know,
like we
someone
have a
No,
mentioned
number
it.
no,
for
we got
every
we have a
stinking day.
945 number today.
We have
but
numbers
not
every
a-
day. We just
not
have numbers.
a-
We're long
We have a
numbers.
10 a.m. number. We got some numbers later today at 10 a.m. But nothing at 8:30 right here that we need to pay attention to. 10
Long
a.m. you get
numbers.
ISM manufacturing.
Man,
So keep
Dennis, what are
an
you
eye out
leaning
on
on the
that.
sell key? What are you doing over there?
know,
Holy
it's not
No,
that
we're
pretty
just
here right now.
like I talked earlier, guys. We got too close to the top of the range. We need to go and hug the bottom of the range. Keep the chop going. Seems like it.
This
Long
NIO.
chop.
If you're stepping out here, you're leaning on the low of the move back from October at 838. So it's come a long ways down. So maybe you start to find some bids in the $8 handle, but that's the recent low, 838. And then on the month, I'm just looking down here at the monthlies because EKS says I look at too short of term charts. It just looks like you're just breaking down. You know, this 9 has been monthly support for a long time, and I don't know. Bulls need to step up here at the $9 area. I've never liked this stock, and when you guys have get over the years, like how much? Oh, they sold 27 cars or whatever. I mean, we're up
That's
to
the truth.
40, we're up to 48. I mean, it's these are hard things to own.
I mean,
but-
Spinner said it best in the chat. Tesla is just, the place to be on all of these things. I mean, you want to pay $20 billion for Rivian? You want to pay ridiculous market caps? I'd rather own Tesla that's making money at 55 times earnings. Again,
but
I'm not
Lucid's
buying
the
Tesla
new-
because I'm not
the
owning
new
any of them.
Tesla.
But
Lucid's the new Tesla, though. Everybody said it. The engineer went over there. It's going to take
nobody
over
said
Tesla.
it on this show. I'll tell
I'll tell you
much.
that. Yeah, that's
Nobody
for sure.
said it on this show because when Rivian was $100 and $120, I don't know how me and Joel could have been more bearish on this show. We said eventually this party is over. It will end eventually, and it did.
Man,
So
I can't
Lucid,
believe
same thing.
Rivian
And the
came
market
from
caps
that.
are still ridiculous. Stop looking, to people who are looking. Well, it's 179, 150. Eventually, it's getting back there. Well, it's not. It's got very, 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 very little possibility of ever getting back there. Ride, same thing. We heard so much about Lordstown, $30 a share. It's $1. It's probably going bankrupt. I mean, stocks that go from 30 to $1 usually go bankrupt. They don't all. Some of them turn around. Some go back to all-time highs. In most cases, they don't. So you don't want to be looking at where a stock has come from. You want to be focused on where you think it's going. A lot of these EV companies are not going to make it.
Nothing macro out there, huh, Dennis? Because this is a pretty good sell-off here.
Yeah, it is.
I don't know.
All right, let's maybe sneak one more before we get our guest on. Let's do First Solar. It looks like that got charged up there. First Solar EPS at a loss of 7 cents, beat the loss of 15-cent estimate. Sales of 1 billion beat the 989.28 million estimate. They do see fiscal year 23 sales at 3.4 billion to 3.6 billion versus a 3.34 billion estimate. FSLR has seemed like it does not want to stop. I could see it down there in the 160s, and I could tell it just didn't want to break. ENPH has been breaking down for like 2 months. First Solar hung in there. Now it's back towards those 180 highs.
The stock is resilient. It is definition of resilient. I mean, again, I know, and you slapped me on the hands when I said it was all-time highs because we go back to like 20 years ago, this thing was $300 a share and people were way too early on it. But it's grown now into that valuation. It's taken the better part of 20 years to get back. When was that 300, Joel? When was that? Was it before the financial crisis or was it back in the tech bubble?
It was the financial crisis.
It was. And what was the high? Do you have it?
Yeah, I do. The high was 317. And you know who actually I remember seeing on CNBC ranting and raving against this stock back then?
Who?
Gordo.
Was he? He was right.
Yeah,
for a long
Gordo
time.
was.
Yeah.
So this went from basically 317 down to about what, $15? 2012. It's come back a long ways. And it has grown into the
11.43.
valuation. It's no longer, just a money burning machine. It makes money. It has grown into the valuation, and it's been just killing it here in the last little while. But again, I don't know.
I would say if you had a target on this thing at 180 and you just kissed it in the pre-market, you got just over it. 180.29 is your pre-market high. You had two highs right at just above that area, 181.5, 182.35. I mean, to me, that's just a whole sell zone right back near the high of the move. I have no idea where to buy this stock at all, but long-term holder, you're right back. Not me. I have nothing to do with this stock. Wow, we're in the 60 handle now, Dennis. You
They're
better get
hammering.
rid of
I
it.
don't
Yeah.
even know the reason here. We're getting so hammered here now, but something else. And again, what was getting hit yesterday is interesting, and the value trade is coming off still super hard.
Oh,
I mean, Johnson and Johnson. I mean, like there was a lot of drug stocks getting hit yesterday. Lilly, bring up Lilly, sneaky selling value names still. So growth held up okay yesterday, but value did not. Value was getting hit
I
yesterday.
noticed that.
It's a tough market right now, and as much as we were in a bull market in January, this is a full-on kind of bear market in February. I still predict I think we're going to have a lot of chop and a lot of sideways action overall, but I like your call sideways to down. So still sideways, but still leaking, and still so many problems eventually happening here. We still eventually test those October lows. I
Yeah,
think there's a decent
3,800
it's not off the
yeah.
table.
Yeah.
Anybody who's saying that's off the table, don't listen to anything else they say, because that's still a potential. But there's no reason, it's by the dip. But man, they are hitting, a lot of good companies here now too. They're not just hitting the bad companies. Unbelievable.
I tried, Dennis.
Unbelievable.
Well, who was our buddy that we had on from? I can't think of the name. John Inch. I remember he was from. Was it Deutsche Bank or it was at some other firm? And he was on the guest list. I'm like, I gotta find John Inch, and then he was bearish this thing for the longest time, and I think he might have retired. Would like to get him on. This GEHC has been a beast since its IPO too. So, the serial underperformer for the last 2-3 decades. Remember, Dennis, when we were in the office, this was the biggest component in the S&P 500.
Yeah. Am I breaking up? The chat's telling me I'm breaking up. Is it me or is it you guys, like the overall connection? Do you hear me breaking up?
I don't see any breaking up there.
Yeah, they're really complaining about it. So I think the whole thing, they're really going nuts in the chat here right now. It sounds like it's a bad connection.
It's not on my side, at least, because I can see. Normally, I'd get a bad connection signal.
It's running. The stream is running through you, Mitch, though, or the stream is running through Joel?
Through me. And so I normally would get at least a network connection issue there to let me know, but I'm not getting any network issues here.
Don't blame me.
On my
could be
side,
YouTube.
It could be YouTube overall. I would say if this is lagging right now, it's on YouTube, not necessarily on our side.
A yard stream.
I would let you know.
Here. We did have YouTube problems about a week ago here, so
it just happens.
What I would just do,
Google. Hit a little refresh, hit the like button. Who knows? Maybe we're not getting enough likes for YouTube to give us the quality. I don't know. Smash it up.
Maybe maybe it's Fastly's fault. Remember when they brought down the whole internet that one time?
That was fast.
All right, let's go ahead and talk about the markets with our guest today. Let's get it started, team. You guys smash the like. We got a good one for you today. All right, Craig Johnson, Managing Director, Chief Market Technician, Piper Sandler. Let's get to the action. Welcome back, Craig. Oh, can we just get a quick little check on the mic, Craig? If you can get to the wheel at the below there, you'll see settings, hit the audio tab, and just make sure your mic is selected there. Sometimes it's my streaming platform that takes off the default mic.
How's that, guys?
There you go. We got you, Craig.
All right. How are you guys? Doing well?
Yeah, we're doing well. I'm just, I like that. I would like to have you on like every week because you give us, good ideas and good concepts in the market. But I know you have a longer term view of the market. We had you on at the end of December, pressing you for some year end targets. You're usually pretty optimistic about the market. Does the song remain the same, Craig?
Well, we're going to be optimistic on the market when the market tells us to be optimistic, to be fair, Joel, right? I mean, we're not, perma bulls like some on Wall Street are. We are letting the markets tell us what we should do. And Can I share my screen? Would that be okay?
Yeah,
Of course,
please,
by all
please.
means. Present
All
down
right.
below. You'll see the first tab will be Chrome tabs, and then on the top right, you can hit entire screen if you just want to share the screen.
Yeah, I'll just share this entire screen here, screen one. So, where we're at right now is there's a lot of nervousness in the market, and I completely understand the nervousness at this point in time, given the fact that we are seeing this kind of big pullback right to a big area of support. And the one thing that I really want to kind of emphasize is we're really kind of testing this area of support here of the uptrend support line off of these October lows. We've got a 50-day moving average, 200-day moving average. And I agree, this may not hold, but I guess from my perspective, the reason I think it will hold is that we've got major downtrend reversals, not only in the Dow, the S&P, the Russell, the NASDAQ. All those have already, reversed the longer-term downtrends. And we've also seen on most of the popular averages, 50-day moving averages crossing back above 200-day moving average, which reaffirms to us that the intermediate-term trend for this market should be higher based upon all that historical work we've done. And I can show you the data going back over 50 years. So at this point in time, a lot of nervousness, and investors are really watching this line very carefully in here. And, to update you guys from what we talked about just a few months ago, we sort of laid out our outlook for 2023 as you remember, a hop, a drop, and a pop. And I slightly updated that here in our most recent publication. And we think that there's still another 5 to 7% to the upside. We think the S&P will probably run up into the 4,300 range before you get the drop in our hop, drop, and pop call. And that is probably going to take you about a 10% pullback, maybe gets you somewhere in a few months from now, back to about 3,800. And then I think into year end, we've got a pretty solid pop coming. And I think that's going to push us to 4625, which is our year end number.
What is that catalyst to take us to 4625? A Fed pivot? I just don't. And again, you're a technical analyst. I kind of just mix it up. I look at technicals, but I'm kind of a big macro picture here too. And it's hard to see the forest through the trees here right now. Give me the catalyst that drives us to new all-time highs, because I'd love to hear it.
Won't be all-time new highs, but it'll be back close.
That's close to new. We'll give you a 4,600. Right. Give me the catalyst to get us to 4,600, because that's dang close to all-time highs.
Yeah, so let me run you back through. I'll run you through that, and I'll also tell you where the drop is going to come from. I think the drop is going to come from when the Fed starts to move from we're raising rates to now going into we've raised rates. Maybe we're at that 5% or 5.25-ish terminal-ish level that people have been talking about. That's when I think you'll probably get your drop to start to come into play, meaning the Fed has largely done their job. And let me just show you a chart as to how that plays out throughout history. Got a very simple chart for you on that one. Right here. Oops. Off a page. Here we go. So if we go back and we just simply look at, from a trading perspective, Fed fund futures, 2-year yields, compare that to the S&P 500. When the Fed has flattened out before and said, hey, we're done raising rates, markets kept working, but it wasn't until you started to raise rates or cut that the market actually came down. That is where I think your drop will come into play. If you go out and you look at world interest rate probability screens right now, it's telling us that they're doing 25 in March, probably 25 in May, and then the probabilities after that, guys, drop to sub 100%. So that's why I think you could actually get that sort of drop phase after that ultimately plays out. Now, where does the pop come in? There's a lot of conversation through most macro firms that we are going to get a recession in the second half of this year. Probabilities might be shifting around in here a little bit as of late. But we know from looking back at history that when you're told you're in a recession, it always gets backdated 7.6 months, not to be overly precise, and every time except for one, the market bottomed while you were in that recession window. That's where the pop is going to come from. When we're finally told we're in the recession, stocks are going to go higher because they're going to look across the valley, and that's where the pop ultimately plays out.
All right, so it looks like you're looking for kind of that throwback look here as we broke above that range. If we went back into that channel, would this break this outlook, Craig?
Back in here?
Yeah, back, let's say, towards that, even that bunch up area in the 380s that you see on the SPY, that recent little 380 bottoming. If we break through there, would this break this model?
I don't think it's going to ultimately break the model. I think you would have to either break below the sort of left shoulder of this kind of more complex inverted head and shoulder low, which would be in the 3,700-ish range. I just don't think you're going to get there. The conversations that I have with people are very straightforward and simple. Last year was not a good year. I mean, the S&P was down 18 and change percent. And this year, the market has been working, and they cannot afford to be left behind. There's $4.3 trillion sitting in money market funds right now, and investors are not going to want to be left behind if this market really does start to work. And again, history's on my side, thinking about recessions, on my side in terms of Fed tightening cycles and when they ultimately stop. Again, I'm not making that up. That is just fact. That is just history sort of playing out in here. And so I guess from my perspective, we would need to see 3,800 to sort of really reverse this kind of hop, drop, and pop call that we've been seeing in here.
Craig, I'll just continue to play devil's advocate here with you because I am on the other side of this. The difference is, and I can, attest to this, is I was sitting there, if you're sitting there with cash and it's getting 1% or 0.75%, it really hurts when the market's going higher. But when you're sitting with a money market fund that's getting 5%, it doesn't hurt nearly as bad. So you can say that, everybody's got to eventually get this money back into the market. But if interest rates stay up here, do they?
Well, you're talking about these money market funds that are at the very short end of the curve. And yes, the Fed has been raising rates. Your 3 months treasuries are above the yield for the S&P at this point in time. And yeah, I can see why people are going to want to sit there. That's a good strategy for 3 months. But if you're looking out over the next 6 months to a year, history would say that when the Fed is finally done, it's only a matter of months, maybe 6, 8, 9 months before they actually start cutting again. And that holding those treasuries aren't going to be quite as attractive.
Why not wait until they actually start the pivot? Why not wait until they actually say, we're going? Mitch, you've been saying this for a while. Yeah. You want to wait until they actually say, hey, we're done. And, and I think the catalyst, here's my problem too, is I think the catalyst for them to actually start cutting rates is a recession. And if we go into recession, it's not going to be good for stocks. So I just don't think inflation is coming down here and magically coming down, because I don't even think it's going to be that easy to tackle without a recession. So I'm just skeptical that they're done, and now we start thinking about cutting rates right away. Why can't they just sit there? Why can't they just say we're done and then sit rates there for a bit?
They can sit there. They can get to that level and say that they are ultimately done. But when you go back and you look at the historical fundamentals, or you look at the technicals in here, I prefer to look at the technicals. But when you're actually told that you're in the recession, when that official announcement comes out, stocks go higher. That has been the mantra of what you've seen happen historically. It's just the evidence that has been the case. People start looking across that. And investors are really smart. And so you can sit and wait in the 3 month treasuries. It's very comforting to be there at this point in time, given the check that we're getting at this point. I completely agree with you. But again, making money doesn't mean that you get the best returns sitting inside of the consensus. And the consensus is to sit on the sidelines at this point in time. And we know that when the recession comes and it's officially announced, we're probably already in the recession, given the fact that they backdate them 7.6 months. But you tend to see stocks move higher when that actual recession announcement occurs. And we laid all that out in our January publication for anybody that wants to see it. I'm happy to send some of that stuff over to you guys. But that is what has been the case. And markets and investors are very good at looking forward 6 to 9 months. And if we're going to be told we're in recession in the second half, I think you got to start positioning for some of those things now. Certainly the big money managers will be buying the dip in here, because they might view this as the last great opportunity to buy stocks before the next leg up.
We're on the line with Craig Johnson. He's the managing director and chief market technician over there at Piper Sandler, a longtime contributor to the pre-market prep show. Craig, another devil playing advocate over here. What if the Fed just has it completely wrong? Like they had it wrong when inflation was transitory. They have it wrong jacking rates up now. What do you say to that investor that has absolutely no faith in the Fed and their current policies?
Well, I mean, the historical rule is you don't ultimately want to fight the Fed, but if you're an investor, and it's going to depend upon your time frame out there, and if you don't have any sort of faith and confidence in them, I would just say you're going to want to maybe put some ETFs in play, simply set those aside, leave it, continue to contribute, maximize your 401k contributions, and perhaps just look at the S&P 500 from a very long-term perspective. Because when you go back long-term, multiple years, markets have historically had an upward bias to them if you have no faith in the Fed. But I would just say there's going to be trading opportunities. And what you guys are talking about, there will be trading opportunities, but I would rather be leaning into this market at this point in time versus trying to lean out, given the fact that we've already had a downturn that's lasted more than a year. And in some cases, biotech and other parts of the market, they've been in a downtrend since early 2021. It's not historically a scenario where you have multiple big down back-to-back years. I mean, you'd have to go back to 2008, 2009. You'd have to go back to 73, 74. I'm sorry, I don't see anything on the horizon that looks anything like those two environments out there. Therefore, I do really think that 2023 will be a positive year, which is clearly not consensus among most investors at this point in time.
All right, Craig. Now, one thing, of course, that we saw the January effect come into play. A lot of growth stocks, tech stocks ran with that. Is that what we should be looking at, those types of stocks for pullback opportunity here as we get the drop in your system?
Yeah, I mean, I think where some of the drop and a lot of this pain is going to come into play is going to be, simplistically, let's just look at some of these things, right? Everybody's gotten tied up into the FANG-related stocks. So if you look at something like Apple, it's not driving us forward anymore. Like the relative strength here is basically neutral. Look at Alphabet. This is another example of something in a downtrend. Let's also take a look at where you're at with Amazon. And again, Elon Musk does a great job. But again, all I got is a check back to the 200-day here. All these large cap sort of FANG-related stocks, excluding, say, Meta and Netflix, they look weak. This is going to be an environment where large cap tech is probably not going to be what's driving us higher. And you come in and you start looking at other things inside of this market, whether it's in, say, the industrials. There's a lot of great looking charts that look like this. And this is what I think we ultimately need to be thinking about with this market in the check back. And to answer your question specifically, I think the large cap tech is where some of that pain is going to be, but mid and small cap stocks, I think there are great looking trends inside of there. And when you look at something like an M.B.A, which is your S&P mid cap, this is dominated by industrials and also in financials. And this is what is really working and sort of powering this market higher. And to the conversation all of you were having just before I came onto the show, talking about Johnson & Johnson, talking about United Healthcare, talking about all these kind of stocks. Well, the rotation is happening. You can hear it among investors. They are selling things like United Healthcare. They're selling the traditional defensive utility names. They're selling the staples. They're selling all these kind of stocks. Why? Because they can't afford to underperform going into the remainder part of this year, and the market's working. And I think a lot of them recognize the recession is coming, and I think some of them are trying to position beyond that. So this sort of rotation out of defense and into offense, but the offense is going to be more small, mid-cap, growthier type stocks is where I think they're going to get positioned into.
I think they're selling all those stocks to move to cash because I sold all those stocks to move to cash. So I am that person that's been chanting sell XLU because it doesn't make any sense to hold the XLU with a 3.17% dividend when you can get a 5% in a treasury and you can go long-term money. I just tied some money up in Ontario, 5.2%, 388 days out. So I think actually some of this selling in Johnson & Johnson and the utilities and the consumer staples is, why do I want to own utilities at 23 or 24 times earnings when I can just own cash? I think the Tina trade is punishing these things more than selling utilities and selling staples to move into stocks. What is your thoughts on that?
Well, you have a wonderful luxury, right? You can sit on 100% cash if you want, if you don't like the market. But when you talk to these portfolio managers like we do day in and day out that are running billions of dollars, they've got a mandate that says you can't own more than 3 to 5% cash. They have to be fully invested. And so being fully invested means that they need to rotate. They need to sell a Johnson & Johnson. They need to sell a United Healthcare, and they need to rotate into things that are working. And again, you've got a great luxury to do that. Sit in a 3-month treasury, feel great about it. I've even done that at points in time too. But right now, that's not where the big money ultimately can do. They can't do that. So they have to rotate. And that's why I think you're starting to see this rotation from the defense to the offense. And I think that will continue to play out.
Love it. Love it. Always great to have your perspective, Craig.
Sure.
Thanks for coming on. Different outlook there. We'll definitely have you back, and have a great day. Enjoy the rest of your, now it looks like we're in the March. We'll see if we get out of that January and February effect. Have a good one, Craig.
Thanks, guys.
All right. That's great for us today. We're close to wrapping up. It's 8:56.
Great job,
Last
guys.
look
You guys,
into the
you
market.
guys.
That
have
was a
tough
great
there.
interview. I mean, I love Craig Johnson.
I do too. I
his
love Craig.
perspective. He's such a great, not only technician, right? Because I mean, you see his ability in the technician game, but I mean, his understanding also overall. Like, he brought that question that Dennis just brought. I thought it was a hard question. He knocked it out the ballpark there with his answer there, and I think he's completely right. Right? We got to think of the bigger boys, right? The money managers out there that have to be kind of invested in this market. That's the difference between being a trader, right? That's the difference between.
I wish I could ask them this. If they have to be invested, aren't they already invested? You're telling me they have to be invested. Well, they
rotate it, right?
Yeah,
I mean, they rotate out, right?
But the rotation here, I do believe that I'm correct on this, that Johnson & Johnson isn't rotating because money managers are selling Johnson & Johnson to buy Apple or and again, I struggle, we should almost bring him back on because I had other questions too. I struggle. So he doesn't like the mega caps. He doesn't like the consumer staples. He likes some of the cyclicals, which haven't been going.
Bring him back on.
So
he's still here. Bring him back on real quick.
All right, let's go.
Come back, Craig. So I have more questions for you. Like, I'm still, and then again, I love you, Craig, and this is why I love hearing the bullish view too, because it gets me thinking in my bearish view. And and I have to flip eventually. I want to be long the market eventually, so I'm trying to get the timing right. How though, if you don't like the mega caps, tech, which is considerably 30%, of the S&P really. You don't like any of the consumer staples. You don't like, the defensive names. You think cyclicals, they're going to be able to pick up the entire slack for everything else to drive us to 4,600? That's my question.
So it's a terrific question. And in the way that I view that particular answer is simplistically this. Yeah, tech is still 20 and change percent, almost 22% of the market. And Tesla's just struggling a little bit back to the 200-day, the Microsoft chart that I showed you, all these others. But you got to keep in mind that industrials are small. We can drive that up meaningfully. Financials are still 14% of the market, and that's going to be one of the areas that they can ultimately rotate into. And you're also correct. I mean, energy's small, 5 and change percent. Cyclicals is a place they can go to. And if people do think that we're in a recession, then perhaps, again, once you're in the recession coming back out the other direction, then you will start to see these consumer cyclicals start to work. And that's all these areas that can continue to do well. I think you're going to have a market where tech is not going to work. These big mega cap techs are going to struggle in here for a while, and it's going to be other parts of the market that are going to do well. It could be NVIDIA. It could be On Semiconductor, just to name a few other names out there that look terrific. So there's going to be places that they need to rotate to. It's going to be more of a stock pickers market. And honestly, individual investors are going to need you guys more than ever before to pick up and show them that where the strength and where the trends are happening in the marketplace. I mean, it's going to be important, but the rotation is coming, and there is going to be enough market cap, but it's not going to be just one particular concentrated trade the way it had been with the FANG stocks going up for years.
I think I'm with you on that. I'm with you on that for sure. I just challenge whether we can go up to 4,600 on that. But Craig, that's a great answer. And I am with you on the rotation. I do think you got to start looking more at the value trade. You got to looking at, different, opportunities here, as opposed to we just go into tech and we make money.
Correct.
Okay. That was a great answer. Thanks for coming back too. Appreciate it. So I'm like, I got more questions for him. He's gone already. I can keep you on here for an hour.
All right, we'll get you on out of here, Craig. You have a good one. Joel's talking to himself, I think.
Joel's talking to himself.
Joel's like if he's at the football game right now, Craig. He's rooting you on, though. I know that much.
He's muted. He doesn't know it.
You have a good one, Craig. We'll bring you back on, my friend. Take care.
Thanks, guys.
Thanks,
always. Craig. All right, Joel, you can unmute yourself now, my friend. Can you hear me?
Is he listening to it on delay?
Oh, no, I was on mute. That whole rant was on mute.
The whole rant. If he had the baseball bat, he would
so
do
animated
those,
too. You were like really trying to make your point. It was fantastic. I was trying to read your lips. It was such a good point.
All right, real quick. I was saying that's the first in the history of the pre-market prep show that we ever took a guest off and brought him back on.
I think so.
So you guys just witnessed history.
We did.
Sound that alarm. Hit the likes. Come on. Smash it up.
I got to hop, guys. Good luck out there. Pre-market low 39.56. Low of the move 39.57 or 39.47.50 in this yo-yo market. Go get them, guys.
It is a yo-yo
So
market.
much love in the chat for Craig. Definitely appreciate Craig coming on today. A lot of love out there. Everyone's saying how great of a guest Craig is. So we'll definitely have him back.
He's very knowledgeable. He's very connected, talking to money managers, getting a feel. It's why we have to very much respect his opinion, even if his opinion isn't in sync with our own opinions. So love Craig. He's been coming on the show for years. He gives a lot of insight. I do think he's going to be right that we're going to go up in the back half of the year. I don't know if we can get to 4,600, but I don't want to be early here because I think there could be more pain before. So that's my fear, is that, you come in here now and you're too early on it. And again, if you're sitting with 100% cash here, we've had a pretty good pullback here. Maybe you're looking to some names. Maybe there is some value names that have come back, but just blindly going into mega cap tech here, that worked in January, but it may not work. So I'm with them on that. I think the leadership could change. We saw this after the financial crisis too. So we've seen leadership change. We saw it after the tech bubble burst. We saw it after the financial crisis. Maybe we're going to see it after a bad 2022 here. That the leadership changes, and it has changed. I mean, the value stocks, some of them, to your point, into my point, being wrong, Caterpillar, having a hell of a run from October to January. I didn't see that coming. And General Electric, which we've been talking about, I have no idea the resilience in this, but it is unbelievable resilience. So there's no doubt that the leadership has already changed to a certain extent. So I just don't know with the mega cap so heavily, still in the index, so much weight, like he was saying 24%. I was high when I was saying 30%. I just don't know if we can get back to highs without him, though.
Oh, I got to catch that. Mashley telling me Bros was on Kramer last night. Might have to check that out. I didn't see it.
The Bros was. You love the
Bros. Come on,
Are you still the Bros?
I don't got the Bros, but I always
always love the Bros.
I always keep Bros nearby.
He's always got the Bros on his desk. You must be their best customer. You talk about it.
Come on, where's the sponsorship? I need every morning Dutch Bros from
Bros should be
PreMarket
paying
Prep.
you, Mitch, because you're on here. You're sponsoring.
Come on, man.
You talk
I
the
try.
stock. You show the coffee. The Bros.
I went to
you,
it.
Man.
I went on I went the boots on the ground report. I mean, come on, team. All right, so I did want to do a little something different here at the end. I want to mention stocks that I've been keeping an eye on Start Swing Trading, just strong stocks, right? So I'm going to quickly run through some of these to give you guys an outlook. MPC is one that's on my radar. Look at the daily chart on this one. Looks interesting as it keeps holding the trend on pullbacks. This is an oil name. We saw those oil names weak yesterday. Oxy, right? Will these bounce back today? We're going to keep an eye out on these, but definitely keep an eye out on Schlumberger. That one came back down yesterday. XOM is interesting. If we start breaking through the 109s, look to see if we go to that 105 area. Multiple lows in the same area for XOM. Let's see if we reverse today in those energy names. One that I do have a play already. I've taken some profit. Full disclosure, I do have U.S. Steel. I took a trade yesterday. Nice call yesterday for the swing. I'm in on this one from 28.87. Going to look for this one to keep popping. It's up there to 32. Let's see if we can keep this running. Why am I in X? We'll take a look at Nucor. Take a look at Steel Dynamics. Look how this is ripping. Steel Dynamics pushing strong, right? Cleveland Cliff. All these.
That's what Craig's talking about. Is there some strength in the cyclicals? There's some strength in some industrials. There is strength here.
Definitely.
So he's talking about this as the new leadership. He may be right. But again, I just, it's the recession thing. If we go into recession, these cyclical earnings will come down. They've had just a hell of a run. But pullbacks here, Mitch, maybe.
Yeah, and I can give you a couple more here. I got agricultural inputs. MOS has been strong as of late. We'll look to see if this keeps going. I have NTR, so I'm keeping an eye on that one. Full disclosure, I have a piece on that. Natural gas, will LNG continue? It's been sideways here. Keeping an eye out on this one to see if it can keep pushing. And then airlines starting to come back. I got stopped out in UAL on this day, team, where we cut 48. A little upset about that, but look how this is holding up pretty well. So what I'm talking about UAL is keep your eyes maybe on AAL as we filled in this gap and now starting to bounce back, right? So if UAL is at the top of the range, AAL at the bottom of the daily range, at least from the support, we'll look to see if this starts coming back. And just to give you guys some outlook from Christian Fromhertz on my show yesterday, he mentioned PI, LSCC. So just really quickly running through these. Of course, you guys can take a look at these if you'd like. CRUS, he took a look at. He mentioned a couple of the steel names, so he's also looking at that one. And one that I thought was an interesting chart, which was a builder. I don't look at these much, but building materials, BLDR, look at that chart. Look at the strength on that thing. That looks like a cup and handle, big cup and handle.
Had earnings,
look to see if it can keep pushing. Yes, it did have earnings. Good mention there, Dennis. We'll see what happens with these. We want to quickly try to always add a little bit extra towards the show. We've been doing the Start Swing Trading show. I know that you guys have been catching also the closing print with Joel Alconen on Pre-Market Prep. And we're going to keep pushing, team. You guys smash the like out there if you guys enjoyed today's show. Any last comments, Dennis?
Just choppy. I think it's going to be choppy again. This is what we've seen from after hours action and pre-market action here. I mean, obviously we sold off substantially last night. We rallied substantially on China. We've given it back here again. We're having trouble holding gains here. People are nervous again, and rightfully so. The FOMO has turned into fear period. So I think you got support down 390 spot. I think we're going down there to test it. I think we got another 50 points of downside here eventually here. I do think we'll bounce. You get in that 50% retracement of the overall move. It's 375. Call it up to 418. Oh, that's tough math. 25 plus 18 sounds like 30. Yeah, so you get in here. Well, you can do your tool too, Mitch, but you're probably in here. This 392-ish is probably close to the 50% retracement of the move. So those are always seem to be decent bounce areas.
Yeah, we'll take a look here. It seems like we've been in an hourly range from like a high of 401, low like 394. We have a couple wicks through that 394 towards 393.64. So I'm going to look to see if that 394s can hold today and we get a bounce there. It's been choppy action, so we'll find out. Like always, you guys can keep up with everything we do. You guys see our handles here. We'll see you later, Dennis. Go do what you do best, thanks, my friend. Get to your trading action. We'll now get you over to live trading. That's going to start up next. Come and check out how we've been doing. I've really been taking multiple trades in my day trading game, also swing trading. So if you guys want to check out an awesome community that really supports itself, I can't say enough how much I love our live trading community. We actually support each other. Yes, I know that it's very hard to hear that traders are supporting each other, but come over to live trading. You check it out. You let me know if you don't feel the support and feel like it can help you stay on top of your game. And if it can't, hey, so be it. But I can tell you right now, there's a lot of traders that have joined our family and truly have given us feedback that they really enjoy how we go about the markets. We're not trying to, pump stocks. We're just looking at processed approach, trying to go ahead and show you guys that so you guys can learn from it. And of course, get into the green by all means. It's never promised, right? The only thing we can do is try to keep probability in our favor. Let's go ahead and do that on live trading. You guys can catch us. We're about to get started. We got, of course, we got Lord Ryan back with me. Of course, we'll keep going after that. And we got some more for you guys. I am looking to get into some kind of interviews. So look forward to it. We might just have a great interview for you up next on live trading. Not even going to give you the name. You got to come over to live trading to find out. Smash the like, team. Let's get over and see what we can find today.